Welcome to a new video. Well, today, Sunday 21st, we're gonna try to find the week the market gonna where it gonna expand. I mean, where it gonna go. Well, so prior week, this week of December 15, it just tapped a key level. This is just a constant conclusion of this week. Okay, that was the first sign that we're gonna see that high taken right there. On the daily time frame, we can clearly see it's in relative equal highs. Okay, and the fact prior week just a tap consequent encroachment of this tail, that's a high pro market condition, that's our signal that we're going to provide see the market run over that high. Okay, so what do we have? A volume imbalance right there. Did the market going to use it to send the price above this relative high? I don't know, but let's watch. And also consequent conclusion of this week, key and that candle low. Why that candle low? Because the fact it is, okay, because the fact it is a volume imbalance in that candle low is higher than prior candle, and it doesn't hit constant closure of this week. That's why the market can potentially uses that candle low to send price, because it can potentially drop them. The initial look at them and take out that candle low before sending price higher, or constant closure of this week can potentially hold it, or the market might not need to come all the way down here to initial look at it and just uses this before it want to send price higher. But whatever happens, soon that candle low is taken, this volume imbalance failed, and we're gonna focus on where this what weekly fair value gap BC. And all that means that wherever the market tap one day weekly time frame level, we're gonna do what? Just daily time frame to shift to bullish to engage those relative equal highs. Okay? So all comes down to one thing. Aim to this run above that candle high. Okay, and we have a weekly volume imbalance. Since the market tap it, you're gonna start waiting the short term to shift to bullish before engaging higher prices. Okay, and let's look at something on the daily time frame. On the daily time frame, the high I was talking is that these two highs. So you do understand? Okay, on the daily time frame, we have a relative equal high. That means that high and that high is relatively equal highs. So on the weekly time, you can see this type of thing, but on the daytime, you get a clear picture on what's going on. Okay, and that is something I like to see. That is that wherever we have a daily time frame, smooth edges. You're right, smooth edges, smooth edges tend to be mad, jagged. Okay, so and what's happening is that and what's happening is that and what's happening is that on the daily time frame, many times when we have relative equal highs, the market can send price first, run above this first high. Listen, run above this first high. Then you're gonna retrace there on the 4 hour time frame to initial liquidity before engage that one. But think these two highs gonna be taken in 1 week, not two, but in 1 week. So that's what I have for you. Until I talk to you next time, be safe. So Have a good week.